Namaskar. This is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. A news report in the Business Standard says that the data compiled by the CMI on investments in new projects in India shows that the aggregate of such investments in 2021 was rupees 5.18 lakh crores as against rupees 5.63 lakh crores in 2005, thus hitting a 16-year low. The investments in 2021 were far lower than what they were in 2005. It says that between 2005 to 2021, the actual investments in new projects in India exceeded rupees 10 lakh crores per year. And for many years in between, they were in fact in excess of rupees 20 lakh crores per annum. Even as recent as financial year 2020, the figure was rupees 16.28 lakh crores, but in 2021, it collapsed to just about 5 lakh crores. This was primarily due to the COVID pandemic, which disrupted demand and supply in the Indian economy. The actual investments in new projects in financial year 2021 could be much less than rupees 5 lakh crores, since it is estimated that a large part of the new bank loan sanctions in that year were on account of working capital limits to struggling entities and not towards project term loans. The sectors which witnessed the maximum new project investments in financial year 2021 were metals and metal products, electricity, chemicals and chemical products, and construction and real estate. Since India's GDP in financial year 2005 was just about $820 billion, as against about $2,900 billion now, as a sheer percentage of GDP, the drop in investments is alarming. And in the matter of investments in fresh projects in financial year 2021, we are not even there where we were in financial year 2005, which is 16 years ago. No other comparable nation has seen such a steep drop in investments during the pandemic period. While it is correct to point out that financial year 2021 has been virtually a lost year because of the lockdown and the unprecedented contraction of the Indian economy, and is thus not comparable with any earlier year, and is thus also best ignored, the fact, however, is that after hitting a peak of sorts in financial year 2016, when the new project investments in India touched rupees 21.91 lakh crores, the figure has steadily declined every year thereafter, not just as a percentage of GDP, but in absolute numbers also. And incidentally, it has been just about since 2016 onwards that the government has been tom-tomming the significant improvement in India's ease of doing business ratings, on the basis of which it claims that India is a far better investment destination. A claim that fails to convince the domestic as well as the foreign investors, both of whom prefer to sit on the fence and wait and watch instead of risking their capital in uncertain business environment of India. The languishing or the rather declining investments into new projects in India has been a matter of huge concern. And at the policy level, it is not that the government has been not initiating measures to attract fresh investments and rekindle India's growth. The government cannot be accused of indifference in this regard, and it has been certainly seized of this grim twin reality of falling investments and falling GDP growth, and has often taken measures to repair and revive both. It is just that the government policies have been consistently not on the mark and they have failed to deliver. The measures taken by the government to trigger rapid growth in project investments in recent times have included the first, reducing corporate tax for companies that have set up new manufacturing projects to just 15% and to 22% for other domestic companies. The second initiative, pruning the repo interest rates to 4%, keeping them low despite the risk of rising inflation and prodding and nudging banks to lend to borrowers to the corporate sector, to the business sector. The third, easing liquidity in the system, hoping that cheap and abundant funds will induce businesses to borrow and invest. The fourth, decriminalization of company law and attempts to simplify corporate compliances. The fifth, claims of a vastly improved ease of doing business in India, which we think are certainly way off the mark. The sixth, reforms in labor laws and consolidation and simplification of the labor code. The seventh measure, a continued emphasis on rapid buildup of infrastructure in India to significantly improve the logistics of movement and goods and passengers in India. The next, increase in government spending to generate demand and livelihood. The ninth, introduction of the Insolvency and Bankruptcy Code to resolve delinquencies and bankruptcies and to unlock the value locked in distressed assets. The next, collateral free loans to MSMEs in order to kickstart their operations and their cash flows. The next is reforms in foreign direct investment regulations, which have included automatic approvals to most foreign investments, hoping to attract tons of foreign investments in India. And finally, not to forget, the PLI scheme, which has become a flagship scheme of the government to attract investments in specific industries, where tens of thousands of crores of rupees are being given as incentives in order to set up manufacturing plants in India. So it is not that the government has not been taking initiatives in order to try to make India an investment destination of attraction for domestic as well as the foreign investors. As per the government, economic reforms in India are a continuous process in order to make India an attractive investment destination. As we said, not just for the foreign investors, but even for the domestic investors who nowadays yet often prefer to invest abroad than risk their capital in an uncertain and predatory business environment in India, for which, according to us, the buck stops on the government's table only. And the reasons why India, despite having a huge and growing population with unmet rising consumption aspirations, which according to us inherently provides a giant captive market to any industry, despite that, investors are wary of investing in India. And the reasons for that are many. The first one is India has an oppressive, expensive, and harsh legal environment arising out of complex and too many laws, where a mere arbitrary government action can put the entire capital of a business at risk, whether under tax laws, whether under corporate laws, or whether under any other business law. The second dissuading factor always has been a corrupt administration with a never ending red tape and bureaucracy. The third has been banks. Banks are generally unwilling to lend in India and are thus imposing preconditions of heavy margins and securities that very few borrowers are actually able to comply with, because of which investments don't take place. The next has been a crisis ridden banking and financial sector, which, even if it wants to lend, just does not have the stamina and the appetite to lend to businesses. The next factor has been pathetic ease of doing business, far away from the attractive ratings that the government quotes and claims. The next dissuading factor that discourages investments has been the fact that demand continues to be low in India. Because of that, capacity utilization remains low. Today, it is estimated to be at just about 65% of installed capacity. And when installed capacity has not been fully utilized, why will new investments be triggered by the corporates? Along with this comes the business confidence. Business confidence of corporates as well as entrepreneurs remains at an all-time low, because of which they are not willing to risk their capital in new ventures. The next factor remains the judiciary. India has a judiciary which only the rich can afford, and where delivery of justice very often falls within the common saying of justice delayed is justice denied. That's the harsh reality, because of which the mandated rights of entrepreneurs do not get given to them. For those who can afford, there are far better investment opportunities abroad. So, why investment in India is the next factor. The crisis-ridden MSME sector, which continues to suffer due to misplaced government policies like demonetization, etc., is the next factor. And finally, when cases like Kane Energy and Vodafone happen, they only further damage India's image as an investment destination. And that explains why, despite the government trying to initiate measures to attract investment in India, they have just not been taking off. Neither the foreign investors nor the domestic investors have actually been convinced. The net result of all this is that investments refuse to take off in India, and that's reflected in our eroded GDP growth, rising joblessness, dipping tax collections, receding middle class, and depleted consumption, all of which feed each other into a vicious cycle of falling investments in India and their subpar growth. Till this is not rectified, do not expect green shoots of recovery of a durable manner be ever seen in India in the near future. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Hello everyone. HW News English is 2 years old now. When we started this venture, we promised ourselves one thing, that news should remain free, because right to know is the right of every Indian. But to keep news free for everyone, we need support from some of you. And thus we have rolled out membership on our YouTube channel HW News English. But mind you, the membership is completely voluntary. The programs that we were doing earlier, that we are doing now, will continue to remain free. First level is a basic level. Here, you can be our supporter by paying Rs 199 per month. This membership gives you certain perks and benefits. The perks include unique badges in front of your name, a live show from Mr. Sujit Nair and from Mr. Akhilesh Bhargava per month for our members. You can also vote in some exclusive members-only polls. Now the second level is Super Supporter. Here you can be our Super Supporter by paying Rs 3,999 per month. This membership will include every perk that comes with basic level. Additionally, our Super Supporters can be a part of a WhatsApp group where we can have discussions and suggestions on various topics. The second perk includes a gift pack with our merchandise. And the third perk is a Google Meet with Mr. Sujit Nair, where you can join the meet and ask your questions to Mr. Nair face to face. Lastly, if you like, we would give a shout out to our super supporters in our programs. So, hope to see you soon with our badges.
पता है इन सब लोगों में एक चीज कॉमन है, गैस करिए क्या? नहीं पता? चलिए एक हिंट देती हूँ, ये सब आपके परिवार से जुड़े हैं। अरे फिर भी नहीं पहचाना आपने इन्हें? चलिए कोई बात नहीं, वैसे भी ये लोग पर्दे के पीछे ही तो काम करते थे। इन सब की डेथ हो गई है कोविड से, ताकि आप और आपका परिवार सेफ रह सके। और यही तो है परिवार का मतलब, अपनों की रक्षा करना। जो हमारे लिए जान दे सकते हैं वो अपने सगे नहीं तो फिर कौन है? मुंबई पुलिस।